Welcome to Werthstein. I'm Giles Keating, Chair of the Werthstein Institute, and I'm here with my colleagues Valerie Plagnol, Stefan Risse and Christine Shields. Valerie, to get us going, one word on what's been going on, the crucial thing going on in the world economy.
My word, Giles, it's Japan. I was there just a month ago, and I can tell you, it's really changing.
Stefan.
My phrase is fait accompli because a Brexit now is a fait accompli, and as always, fait accomplis are not relevant for the markets.
Christine.
My word is politics. I think there's more political uncertainty around in the world now than in my lifetime.
And my word is expanding, since that's what the world economy has done since our last show. Later, we'll look at two zeitgeists you might consider investing in, both of them major themes which we think will grow faster than the general economy: robotics and Internet 4.0, and we'll vote to choose one. But for now, what's the evidence for continued global expansion? The US is adding jobs, consumers there are buoyant, and investment has surprised to the upside. Europe has had some mixed signals from business surveys, but Germany's GDP rose faster than its quarter-century average. And overall, we think both the Eurozone and the UK are on track for reasonable growth despite Brexit. In Asia, Japan is lagging, but China's retail sales are healthy, still rising in double digits, which is much faster than elsewhere. And oil prices in August rebounded to around $50, well clear of the sub-40 danger zone that threatens financial strains on producers. And yet it's still low enough to leave consumers with good purchasing power. Reflecting this good global economy, financial markets have tended to rise further. Some US equity indices have touched new all-time highs. At Werthstein, we still see investment opportunities, especially in the zeitgeist that capture those fast-growing parts of the economy. However, the rally in markets does mean that prices are not quite as attractive as they were a month ago. The Fed has started hinting again at the possibility of a small US interest rate rise before the end of the year. Now look, so far this hasn't unsettled investors, but we do think it increases the possibility of a temporary stock market correction. And growing political uncertainty around the world points to the same risk. If there is a correction, I think it's likely to represent a good moment for accelerating investment into portfolios rather than holding back. But does the panel agree? Stefan?
So, as you know, I'm very optimistic for the stock market. I pointed that out in our last show, and I'm still there. But so where I not agree with you is on the US economy. I think the European economy is stronger than the US economy because there'd be good labor market reports, that's right, but the GDP growth is not very high. There had been a lot of leading indicators what were disappointing in the end. And you have to see the budget deficit is again much than 4%. So that's all bought by new deficits. And in my mind, this growth in the US is not healthy. It will go on, I think. It will not bother the stock market in the moment, but we have to have an eye on it.
Christine, what do you think?
Well, I mean, I agree that the US performance has been disappointing so far, but I think there's a very good chance of an upturn in the second half, which will leave the year as a whole with half-decent growth, which is obviously positive. I think the world economy needs a fiscal stimulus because, you know, the problem since the global financial crisis actually has been that growth almost everywhere has been really quite slow, and it's certainly not gone back to pre-crisis trends. So I think a fiscal stimulus wouldn't go amiss actually to try and lift us out of where we are.
You were just in Japan, Valerie. What's going on there?
Well, that's one of my questions. I mean, I'm more confident in the real economy than I am in governments and central banks, for that matter. And Christine, I know there is a sense that we need to have some fiscal stimulus. The problem, what kind of fiscal stimulus should we get? And I'm afraid the direction it is taking is not exactly the one we want, because it's just adding debt to debt and forcing central bank to intervene even further in that particularly dangerous kind of cycle where Japan is well ahead the rest of the world. So my optimism on the real economy stands away from what governments are actually doing. So I'm very cautious. There is a lot to do on infrastructure. I'm not sure they're taking the right move at this moment.
I suspect probably what's needed in much of Europe, certainly, is small-scale infrastructure investments. UK being a case in point. Better do localised smaller projects than these great big mega projects, which are the sort that are being proposed.
Stefan, do you think we're going to get that?
So we have to see. So I criticized in the German press our finance minister very hard, saying it is crazy if you get interest rates by borrowing you money, because it's negative also for 10 years, to be fixed on these zero debt. So you have to do debts to invest in infrastructure, in education. I think they're missing that, and they're having a very big chance in the moment to do this. So I agree with you. We need fiscal stimulation, but it shows again we need it everywhere in the world, with the exception of Germany, so that the economies are growing, and that shows. Yeah, we are in a situation where we not know how this experiment with this enormous expansion of the money supply will end. But as long as the party goes, you have to dance.
Well, let's just come back to that. Valerie, what's your view on the markets now?
Well, I'm very cautious right now. I mean, I was pretty much optimistic. I think we had a very nice summer and a very good rally. But right now, I mean, September, October, I feel much more cautious. A lot of political issues are coming up. Of course, mentioning the US election, for one, is really tricky. You mentioned the Fed. I tend to agree with you. The speech by President Yellen was very clear in many respects, and I'm not sure the market is taking it right where it is.
I really actually agree with you, because I mean, I actually think the US economy, contrary perhaps to Stefan, I'm sort of okay with it. More, Christine, I think in your line. But I think because of that, the Fed is going to go ahead and raise rates fairly soon. And I don't think that's a disaster for markets, but I think it can cause some short-term unsettling. I mean, Christine?
Yeah, I mean, I suspect the Fed may very well hike in September, actually, which could be a shock to markets. And I think, as always with markets and politics, they very often don't actually see the risks till it hits them in the face. And then there is a sharp correction, and that's what I worry about.
All right, well, lots of risks around, but also opportunities. Before we actually move to the vote, I'd like each of the panel to just give a quick summary of what they think the outlook is for the markets over the next several months. Valerie.
Well, Giles, as I told you, I mean, I'm a long-term optimist. Right now, I'm very cautious. I feel much more comfortable for staying put and knowing better what's going to happen in the coming months.
Stefan.
So what happens since our last show is a big confirmation for me, because I was a big optimist in our panel, and the stock markets did exactly that. They rise, and I think that's just the start of a big stock market rally. Not because I see a big expansion in the old industrial countries, but because the undervaluation of the equities in comparison to the bonds.
Christine.
Well, as always, I'm more cautious than Stefan, particularly. I share Valerie's view, really. I'm concerned about the short term. I'll be happier once we've got through the election period next autumn, next year. Once we got to that point, then I might be a bit more optimistic.
Thank you. And in my view, well, I think there are big risks here. And I think I'm probably particularly worried about the Fed, perhaps even more than I am about the effect of politics. Well, now let's move to the actual vote. Remember, it's between 0 and 10. 0 is most pessimistic, 10 most optimistic. Valerie, please kick us off.
Well, Giles, this time it's a 4.
Stefan.
So for me, it's an 8.
Christine.
For me, it's a 3.
And for me, it's a 4. So, if we put that together, that's 19. That's a lot more cautious than the last Werthstein vote. So now let's think about how we actually invest. And in the second half of the show, we're going to be looking at zeitgeists, which could be ways to actually invest in the stock market. Well, in the first half of the show, the Werthstein vote was 19. Now, that's a long way down from the 29 that we had last time. And the 29 turned out to be pretty good in the sense that global stock markets have risen since our last show. but the 19 is saying that we are significantly more cautious looking ahead from here. But that doesn't mean there are no investment opportunities. We still think that we can see opportunities in zeitgeists, areas of the world economy that are set for faster growth than the general economy. And this month we're going to look at two particular zeitgeists, Internet 4.0 and robotics. Stefan, tell us please about Internet 4.0.
Imagine you're running out of butter or milk is scarce. Not you anymore, it's your fridge what orders new supplies directly from an e-commerce grocer. Or imagine that you are on a driving holiday and you reach the mileage at which the car service is due. You don't have to bother with the tedium of sorting that out. Your car makes the appointment with the garage directly. And during you on holiday, you can record a TV show to see that when you are back. These are all examples showing that the possibilities offered by the internet are far from being exhausted. We are speaking about the Internet 4.0. It is estimated that by 2020, some 50 billion devices ranging from fridges to cars to TVs will be connected to the internet. These will stimulate more e-commerce, more need for online payments and credit system, more need for powerful cybersecurity, extra functionality on smartphones. Therefore, this zeitgeist invests in companies that benefiting from this new phase of growth of the World Wide Web.
Stefan, thank you very much. I mean, it sounds a good growth case, but just tell us a bit about which companies are going to benefit. Is it just the big names like Amazon and Google, or does it go beyond that?
Of course, they will grow further with these next step of the internet, and also payment systems, MasterCard, if you like, as one company, cybersecurity, as I mentioned. What I'm missing in the moment, and perhaps it's a bit too early for that, are the companies who are really focused on, let's say, the technologies measuring how much milk you have in the fridge and sending them the order to it. If we can in the future identify companies like that, it would make this zeitgeist more interesting than today, but it's already interesting because it will maintain the growth of the whole industry.
All right, well, clearly there are opportunities there. Let's now come on to robotics. Valerie.
Yes. Robotics and the global robotics market is especially growing, and especially in Asia. There are serious growth potential here. The market is expected to reach $1.2 trillion of investment by 2025. That's an annual average growth rates of about 35%. Now, there are four broad areas in this particular sector. Industrial robots, they're spreading beyond the auto sector and switching into the new words you have to remember, which is cobots, domestic robots, personal robots, and chatbots. So an equity index covering specific robotics companies as well as generalist companies had a great 10 years run until mid-2014. Since then, it fell back for a while, but recently it has been rising again. So there is a powerful global industry here with really considerable growth potential ahead.
Valerie, just help me out here. Cobots, that is a new word. What does that actually mean?
Well, it's the diminutive for cooperative robots. Basically, industrial companies and industrial robots that will interact with humans in a totally safe environment. So end of the barrier, protected, one-arm, big, threatening robots coming in, those mobile robots, perfectly safe, helping humans on the factory floor.
So all those articles I've been reading about how robots are somehow kind of in conflict with humans, this is the complete opposite of that.
I don't think so. They're not in conflict. They're going to come and help them. That's already the case. It's happening. It's happening also in all the domestic area, but also when we say domestic, these are the small, items that are getting really affordable now that you can have in your house. And it's also in all the medical sector. And it's helping elderly people, it's helping disabled people, And it's also helping them not only on the physical part, but also on the intellectual aspect of reading faces, emotions. This is the kind of interaction we're talking about. This is fantastic, I think.
I know, it sounds good. And then the other thing you mentioned was chatbots. Just tell me about that.
Well, that's the part of the robots we don't see, but we can interact with via the internet. These are the people, or the robots, I should say, we're chatting with. When you ask questions on the internet, you get an answer which actually comes from a robot.
And I thought that was a nice person, but there you are. Christine, what would you, how would you take it from here?
Well, I think it's all absolutely fascinating. Both stories have got amazing opportunities. But I do worry about automating everything. I mean, people have still got to have things to do. And my other worry, I think, is that also it's important that you have a faint idea how things work. You know, when I was a girl, you had a man with a screwdriver came along to mend something. And the further away these things get from your everyday common sense approach, if you like, the more you're completely vulnerable if there's a problem, power cut or cybersecurity attack or something. You know, it's quite worrisome. You'd be sitting there in your house with no lights and you know, no food because your fridge hasn't reordered the milk.
Yeah, no, I see that. Stefan, what's your kind of thought about that?
As long this is all in the process was is defined, so there's a list of problems that could occur and you have a solution for that. But if there happens something, what you could not foresee, then you have really a problem. We know as it is with cars. So if your car is broken today, so no one can help you anymore. In earlier times, they come with a screwdriver. Now you have to put the car and bring it directly to the garage. So that's really a point.
It's also a point. It's not just the garage. It's actually the main dealer garage. It's not the little man on the corner, because he can't do it anymore because he's got neither the hardware, the software to do it. Which means you're putting more power in the hands of bigger businesses.
Well, now, is this right? I mean, Valerie, could the robots perhaps even help with this problem? Yep.
I think they could. I think also there will be humans behind those machines and also the capacity to repair them. I'm more on the optimist side. I think what we see here, and if I were to be cautious, is more that some of those robots are more on the developing side still, you know, especially when they interact with humans in terms of helping them, helping the elderly, but the medical part is tremendous.
Yes.
And it won't really change the fact that you need a good surgeon, but he's going to have enhanced capacities and preciseness to do things. Exactly. So that's hugely important, and of course in dangerous areas of dealing with some kind of businesses.
Demolition or something.
Exactly, fantastic. And recycling things and all. So I think, and of course prices are coming down and costs are coming down. So I think it's inevitable. I think it's going to be great. It's going to be great on the factory floor. But of course, I'm biased. I was welcomed by a robot in Japan in a store, and it's fun. I must say it's fun. And it's still a limited area. I didn't feel overwhelmed.
I quite like the notion of a robotic vacuum cleaner, though. That would be rather nice. But then would it fall down the stairs?
No, I am fascinated by the way Japan has become a market leader because they've got such a labour market shortage, actually. But I mean, Stefan, in Europe, we don't have a labour market shortage. We've got the opposite. We've got actually unemployment. Is there a problem, do you think, that robotics and perhaps the internet as well are going to kind of actually make it more difficult to employ people, or what do you feel?
So this is a problem we have since we have the more automatic of the production. But the bigger problem in my mind since the 90s is not that robots take over the work of the workers. It is more that we bring the work and the factories to Eastern Europe or to China. That's the bigger problem regarding the employment situation, let's say in Portugal or Spain, where all the textile industry left because it's too expensive to be there, or the UK, of course. But this will go on, and we not just have an economic, we need more than an economic view on this. We need a social view on it. What should we do with this less work we will have in the end, and how can we share that with all the people, that we have not this amount of unemployment people and the other ones, creative ones who build the robots, and have to finance the other ones. So
these are great big issues. But now look, as investors, Where do we think really the opportunity is here? I mean, Valerie, you pointed out that the robotics have, after a good 10-year run, have had a softer period. I like that, because I like going in when things are just a little bit down. But Stefan, I think some of the companies you've mentioned, the bigger ones, have just been going up and up and up. Are they perhaps a bit toppy here?
That's exactly the point, and also my concern. I really like the story. I like it more than the robot story, because that's not a new story for me. I remember I was a child on the Hannover Messe called CeBIT today, and there had been all these robots looking like these 3PO from Star Wars. And for me, that's not the new story. But the problem with the Internet 4.0 story is you don't have these focused companies, and the big companies are all run very well. That means it's priced in. We don't find something here with a discount or something what other people have not discovered. That perhaps make for the investment, the robots, a bit more attractive.
All right, look, I think that's a very good summing up, actually, a lot of the points. So now let's move to the vote. And I'm going to ask each of the panel members to vote either for robotics, please, or for Internet 4.0. And Valerie, please, could you begin?
Well, Giles, definitely robotics. I think we're coming into a new generation, new market, new opportunities, and good pricing.
Thank you. Stefan?
So also robots. So my story, Internet 4.0, was better, no question in that. But as I said, the investment opportunities are better now. You get it with a discount. So that's the reason why I also, in the end, on your side.
Christine?
And I'm on robots as well. I want a robot lawnmower, please.
All right, well, I'm on robots as well. I really am convinced by the argument that we're entering a new growth phase there. So that's actually 4 votes, and that means robotics is the new Werthstein zeitgeist, and that comes in alongside biotech, which we voted for last time, and all of the other zeitgeists. Thank you very much to all of the panel, to Valerie, to Stefan, to Christine, and we will see you at the next show.